Guys, markets have skyrocketed this morning. They went from literally flat to a little bit up to skyrocketing sky high. Why is that? Well, Core CPI and CPI came out. Here is what was reported. Core CPI, 3.2%. Remember, the goal for the Fed here is 2.0%. Core CPI excludes food and energy. Why is that? Well, because food and energy are highly volatile. They can change very quickly from month to month. Overall CPI, 2.9%. Now, why has this skyrocketed the stock market? Mo, what are people thinking about interest rates cuts? Because that's what everybody is focused on, which is interesting because when rates went from 0% to 5.25% in a matter of a year and a half, you would have thought it would cause asset prices to absolutely collapse, and it did not. Stocks went down for the year and then skyrocketed from there. So what do people think about interest rates now?
Yeah, so this is an interesting one. This is from Barron's. It says odds of no cuts in 2025 were down to 17.3% compared to 25.7% prior to December. And if you look over here at the CME Watch tool, this is incredible. So we are not seeing another rate cut until June of 2025, according to the market bettors, which is 44%. And throughout the rest of the year, Paul, there's not another predicted cut. We're going to stay at a 25 basis point cut after that because you go to December. Look at that, 33.7%. Still, majority thinks that we're going to be a 25 basis point cut this year. It surprises me. I was expecting more cuts, weren't you?
Well, it's interesting because it's 15 days into the year.
Yeah.
Rewind back to December of 2023 and everybody expected 7 or 8 cuts for 2024. Then we have 3 cuts for 2024 for a total of 1%.
Right.
And now, there was recent talks about, okay, multiple cuts this year. And now we're talking about 1 cut. The whole point is, guys, we have no idea what's going to happen. 1 cut will change to 5 cuts, will change to raising rates. It's all just a crapshoot. What we're trying to teach here is this principle-driven investing idea of saying, listen, rates are going to go up. Rates are going to go down. We're going to have wars. We're going to have bad things happen. We're going to have great things happen. In the history going back to 1950, what are all the things that have happened? What are all the... I mean, Mo, just in the last 2 years, what has happened?
If you go back to 2020, you can't even count on 2 hands how much crazy stuff has happened.
It's insane. And guess what? What drives values in stock markets are the economy and profitability in the long run. That's what's going to drive it. We don't want you to get mixed up worrying about where rates are going to be. I love this Warren Buffett quote when he says, listen, if the Fed chair was whispering in my ear every single year about where rates are going to be, I would not change how I invest. I think it's a brilliant way to look at things. A well-run business bought at a good price will do well over the long period of time, no matter where rates are. Don't get stuck in this game of back and forth. I look at this and remember, guys, the Fed was talking 2%, 2%, 2% for core inflation. We're at 3.2. That's a far cry from 2%. That is 60% higher than 2%. And yet they're still talking about cutting rates. Guys, cutting rates is an inflationary idea. What you do when you're cutting rates is you're trying to cause more people to grow their businesses, to borrow money, to buy more stuff. That's what cutting rates does for the economy. So when you're trying to cut rates, you're trying to spur the economy on.
Right.
Why are we trying to spur the economy on when core inflation is still 60% higher than where they want it to be?
Yeah.
Is it just words? Go ahead, Mo.
So if you look at this chart, look at, you were talking about inflation as being 60% higher. Look where we were in June of 2022, 9%. You remember that?
Oh, they started raising rates back in March of that year.
Yeah. And it's crazy. So now we're almost to where we were pre-COVID. We're almost there pre-COVID. But it's still, like you said, 60% is a long way to go to get to 2%.
Yeah, but Mo, so you were born in 88, right?
Yeah.
So I was born in 81, and of course I didn't know what was going on in the world back then, but inflation was pretty high back in the early 80s. But since 2002, 2003, inflation's been I think like 1.8 or 2%, which is historically very low. Inflation overall is like 3.5% if you go back 100 and some years. Now, with that said, Mo, have we seen this amount of money printing?
No.
This money printing is insane.
It's crazy.
This, guys, I don't know what the future leads to with this money printing, but when we're printing so much money, I'm hopeful that this Department of Governmental Efficiency ends up curtailing government spending because we have a major problem with that. And if you talk about long-term inflation problems, when you print money, when you get it out to the people, that's what causes inflation. You know, one of the things I got wrong in 08 and 09, I remember thinking to myself, all this QE is going to cause inflation. Well, I was wrong. And I believe the reason I was wrong is the money didn't go into the people's pocket. It went to support these banks. But then in 2020, when COVID hit, we put money into people's pockets. Yep. And what did that do? Remember, I mean, you could hire people for $12, $13 an hour. They're pretty good. I literally just put a part-time personal assistant job on Indeed for my wife and I for $20 to $25 an hour. That was all day long a sub $15 an hour job just 4 or 5 years ago.
That's definitely true.
And the funny part is I'm happy to pay it. Like, I'm not sitting there going like, oh my God, 20 to 20. I'm not sitting there going like, okay, well, I'll get a good, Indeed suggested, by the way, $15 to $17 per hour based on where we lived and all and the tasks involved. But I'm like, listen, I'll pay better to get a better person. Back in the old days, 15 to 17 got you that better person. And when I say old days, I mean 4 or 5 years ago.
Exactly.
So when we put money into people's hands, they spend more, they buy more, in that point, we were giving people $600 a week to stay home. So if you're going out to apply for a job, you would have said, oh, this job only pays $700 a week. Well, I can sit at home and make $600. Why would I take this job? That's inflationary. These things are inflationary. We have to pay more money to make goods and services. That causes prices to go up. Trump's always talking about these tariffs. Guys, tariffs are just a tax on consumers. That's it. A business is not going to absorb that cost. When labor prices go up, a business is not going to absorb that cost. They're going to pass it on to the consumer. That's what's inflation. And when we talk about these companies that, do so great, that's what I want to focus on. There's so many great companies out there that are going to do great no matter what's going on in the economy. Avoid companies that have very low margins that get drastically affected and can't pass those expenses on very quickly to companies. So like grocery stores, very low margins, 1% to 2% on most grocery stores, right? Yeah, but it's food prices. They're passing those prices on very, very quickly to people, right, Mo?
So that takes us to the Bureau of Labor Statistics website. This was put out this morning, and you can see food here is still up 2.5%. And it's one of the higher numbers here. I mean, maybe it's mid-range, but you could see over the last 12 months, food is still up 2.5%, up 0.3% over the last, as a whole. This includes food away from home and food at home, up 0.3% as a whole through December. But that's a very volatile one. And like you said, they pass it on to consumers extremely quickly. They
have to. That's just the way it is. I mean, the perishable goods, you can pass them on because the turnaround is very quickly. I remember once, Mo, Mo and I own a couple homes in Mexico that we rent out. And we went down there, and a friend of ours down there owns a banana plantation. So I once asked him to give us a tour, so he did. I don't think Mo was with us.
No, I wasn't.
So we go on the tour, and I asked him, hey, these bananas you're pulling off the trees, how long before it's in a grocery store in the U.S.? He said 48 hours at most. And I was like, my God. Like, we were watching the guys cut the bananas off the trees. And he said, yeah, those bananas will probably be in 24 hours, no later than 48 hours, into a grocery store in the United States of America. And I was like, that's crazy. It's nuts. You know what's even crazier is they were looking at me, the guys who were cutting the cheese, the bananas were looking at me weird and kind of giggling. And I looked at my friend. I was like, hey, what's going on? He's like, you're probably the first white person they've ever seen. I was like, wow, kidding. That's it. Oh, yeah, it was incredible. I mean, it's a totally different world. I mean, those guys were wearing they weren't wearing shoes. They would wear like 6 or 7 socks and run through these, plantations with big bushels of bananas on their machetes. There's a picture of me like taking a machete to a banana tree. But it's pretty awesome. So anyways, the other thing I want to talk about today, Mo, have you seen what's going on with MicroStrategy?
No.
So MicroStrategy is buying tons of Bitcoin, right? They're offering now a 0% coupon that allows you to take action on the upside of the Bitcoin. So they're basically trying to borrow at 0% to buy Bitcoin.
Right. Okay.
They've spent $18 billion in the last few weeks buying crypto at lower prices than the high. It doesn't mean anything. In the short run, I was going to say stocks are a voting machine. In the long run, they're a voting machine. But in the short run, Bitcoin is always, same thing. In the short run, Bitcoin's a voting machine. In the long run, it's a weighing machine. My belief is that weight in its current capacity is going to be 0. But with that said, MicroStrategy, Michael Saylor, they're making huge bets on this. And I always get concerned when I see 0% and very loose money trying to chase some sort of return. So they're offering investors some sort of upside in the equity if it works out. And if it doesn't work out, they're like, oh, but it's good because then you can call the debt early and get out. And I'm like, well, what happens if Bitcoin collapses?
Right.
If Bitcoin collapses and you want out, how do you get your money out if your entire company is based on the success of crypto and Bitcoin?
I feel like there's some fine print in there that people are not reading.
Well, I'm wondering if this is like, and I'm not trying to be this guy who's a fudster about this, but I've seen people say like Michael Saylor and MicroStrategy is basically a Ponzi scheme. But I'm like, God, it kind of seems like it's like, hey, listen, let us borrow money. If it goes up, you'll make a lot. If it goes down, you can call it on us, but you really can't. I mean, isn't that what happened with what's his name? Bernie Madoff? If it goes up, you'll be fine. But if it goes down, you can call it on me. But then no, if it collapses, if it collapses, you have a lot of debt still, but then you have a collapsed asset price. Right. How are you going to be able to handle that? I don't know. And I'd love to hear the comments from people in the comments below saying why this is a good idea for MicroStrategy. It's just, we've looked wrong. I've looked wrong on Bitcoin because it's up so much, but I just don't see. Go ahead.
I will say, though, there has been a lot. Think about Sam Bankman-Fried, all of these people that have been in this crypto world that have done all of these different things, that there's been a lot of fraud in there. You know what I mean?
We've talked about a lot of fraud. Even Binance, the guy.
Another one.
Yep. Binance was the self-professed adult in the room, and he even got indicted, had to pay a big fine. And it's like, and it's funny because I hear Michael Saylor talk, and I don't think like, oh, this guy. I mean, I just look at it all the time as, who are the long-term investing smart people who believe in Bitcoin? Even JP Morgan's Jamie Dimon, he's just like, I still don't see any intrinsic value in this. And of course, then the trolls come out and all that stuff. But listen, markets are up a ton. Let's see what they're at right now. The Nasdaq's up 2.3%. The Dow is up 1.7%. The S&P is up 1.76%. For the year, how is the NASDAQ for the year? Let's see the ETF for NASDAQ. I'll see year to date. It's about even.
Okay.
It's about even. Literally like down 0.13. So it's basically even. Guys, from this point going forward, where do you see, we just saw yesterday an article that talked about, let me pull this article up actually. This is from Y Charts. The 10 largest stocks in the S&P now represent 39.9% of the index total market cap, with the top 5 alone making up 27%. Guys, that's a huge amount. Like historically, I don't know the exact number, but I want to say historically it's like 15% or some, maybe 20% for the top 10. I think there's a way to find it. Let me look for it real quick. So this is going to the end of 2023, but I found this going to history. Look at this, Mo. We've got 18% back in 1990. So the basic average is about 19 or 20%. Yeah. That's the average. We're currently, at the end of 2023, we're at 32%, and that was a 30-year high. We're now at 39.9%.
God bless.
Why would this be different this time, Mo?
Yeah, and I made this analogy before. Let's just take the S&P 500. You have a house that's by the ocean. You have 500 stilts on it. Now you have 5 stilts holding that house up. Is that a bet you really want to make?
It's a tough one.
Not saying it can't hold it, but man, that's a tough one.
Or the another analogy is you can smoke cigarettes every single day for a long time. Eventually, it'll catch up to you. You'll have some sort of issues. And guys, we're not fudsters. I own stocks. I've been buying stocks for the last 2 years. I own 26 companies and ETFs. I'm not putting all my money in them. A lot of money is in cash, but I'm slowly dipping in. I'm even buying low-cost ETFs on a dollar-cost average basis. It's funny. I saw a stat recently about history shows that it's better to do lump sum investing. But if you look at lump sum investing based on valuations, it is better to do dollar cost averaging when valuations are high. So I'm really glad I remember looking at going, there's no way that it makes sense when valuations are this extreme to do lump sum investing. And sure enough, I should have pulled it up, but I found a stat that showed if you did lump sum versus dollar cost averaging. And sure enough, in 2000 and like 2008, 2007, it was better to do, dollar cost averaging. In 1982 is lump sum. I mean, obviously based on valuations. And guys, another thing that I want to bring up here that's very interesting. We always talk about the market's heavily focused, like Mo and I were talking about, on these top 10 stocks. Guys, on our software, we have a link for 52-week lows and stocks near our 52-week lows. Guys, look at the major companies at 52-week lows. Novo Nordisk, Johnson Johnson, PepsiCo, AMD, Adobe, Verizon, Comcast, United Parcel Service, Nike, Rio Tinto, Anheuser-Busch, all of these ones, guys, these are major companies at 52-week lows. So the market continues to go up, yet these companies are sitting at 52-week lows. And guys, look at this list. It ain't short. These are major companies. Dow was in there, Prudential, all of these companies. Macy's, which has been a big run-up lately, but this, as well as stocks near their 52-week low, that's within 5 or 10%. This is what it does. So guys, this is another reason why these tools are so important. It allows you to quickly screen, because we love looking at 52-week low stocks as a starting point to look for value. So guys, we're part of this Everything Money community. We do a great job. We make tools that make investing better. If you want to check out our tools, go to everythingmoney.com. We have a great trial, $7 for 7 days, gives you all the tools to be successful. And if you sign up now, you're grandfathered in, because we're making changes to it that will take away products. So you have to make sure you sign up now. That way you get all of our tools guaranteed and your pricing tier for the rest of your life. Thank you for your time.